So everyone, I am James Haft. I am James Haft. I am Lou Kerner's partner. We founded CryptoOracle, and we were lucky enough to found CryptoMondays, which is, I have to tell you, I think our proudest achievement yet. The fact that you guys come here and form a community around CryptoMondays is just an emotionally important thing to Lou and I, to see the community grow and help each other and see all the opportunities that are formed and the relationships that are formed in CryptoMondays is just a really powerful thing. We're now in 15 cities. We're growing about a city a week. And I've now traveled to 6 different cities where I've spoken to or drank at, usually just drank at, CryptoMondays together with the crowd, which is always as fantastic as this crowd. So first of all, I want to thank Pillar, the blockchain-enabled wallet, which is sponsored this evening graciously, and Knotel, who has given us the space, and of course, Kendrick and Cathy behind me. From Prysm Group and Republic in reverse order. And so tonight, they are going to give us a master class in securities tokens. We are lucky to have these two here. They're fantastic. I'm looking forward to being in the audience, and I'm going to hand it off to Lou. Thank you very much.
Okay, thanks, James. Actually, in addition to Crypto Monday, we actually started another meetup about, I don't know, 6 months ago now, called the Token Economics Meetup. Like, one day I woke up and I realized token economics was a thing, and I tried to find somebody who could teach me all about token economics. And so I got turned on to a couple guys. Oh, these are the token economic experts, and they weren't. And and then one day I met this guy named Tom Bollock, and he blew my mind. Like, everything he said just totally blew my mind. I said, how do you know this? And it turned out that he had been the 8th employee at Zynga and had done token economics for like Mafia Wars, which had 80 million people in it. And so literally, who knows more about token economics? I mean, that's a lot of experience to really know. And so in order to get another hour to talk to him, I started the New York Token Economics Meetup. And it was awesome. It was just an hour of me talking with Tom, and I was shocked there were like 100 other people in the room for token economics. And so I was just like, who heard about this through Token Economics Meetup? Anybody? Yeah, okay. Right, these are serious people about token economics to come 6 months ago. So it's great to be here, and now this is also the second Token Economics Meetup, so thanks for coming. And we have now another 2 experts on token economics. And let's just start. Why don't you guys introduce yourselves, and and how do you know so much about token economics?
Oh goodness. My name is Cathy Barrera. I'm a partner at Prysm Group. We are a blockchain economics and governance consulting group. We help startups structure the economics of their platforms in order to achieve the vision of the entrepreneur. I'm an economist by training. I have a PhD in economics from Harvard, where I studied contract theory and incentives. I'm not sure that contract theory has ever gotten that response before in life. But I will let my advisor, Oliver Hart, know. He'll be very pleased. Anywho, and we have a couple of other economists on our team, one of whom is here tonight, Stephanie Herder. She is an expert in market and mechanism design, and our third expert is an expert in the economics of information. All of these subfields of economics need to come in to help with the design of these blockchain platforms, which everyone knows are decentralized, distributed networks in which you have to provide the right incentives to get the kind of behavior you want.
Well done. Tough act to follow, Kendrick.
Hi, everyone. First of all, thank you so much, James and Lou, for hosting this event. There's no party like Crypto Monday, so it's an honor to be here. I'm Kendrick. I run an investment platform called Republic. Essentially, it's a token sale platform for US-based projects to access non-accredited investor in a legal, compliant manner. So we're a sister company of CoinList, and I helped set up CoinList back in summer of 2017. In the course of that, advised closely Filecoin, Blockstack, and a few other large projects. And right now, in the past 6 months, Republic has reviewed probably between 700 and 1,000 token application and white paper. So we have our own lens of token economics, and really excited to share on that perspective. Before CoinList, I was GC at AngelList and a fellow in corporate governance and capital markets at Stanford. So not quite an economist, not nearly at all an economist, but share some shallow experience.
So, let me ask each of you, when did you first understand that crypto token economics was a thing?
When I first heard about blockchain.
Which was when?
Well, so I'll hedge on that slightly. So the first time I heard about blockchain was a few years ago, but I, like most economists at the time, immediately thought, that sounds like nonsense. So it took a little while before I really started learning about the underlying technology. And when that happened, that was about 9 months ago, I really understood the power of the technology and how it could potentially impact the economy. So I came in with an economics perspective, so I guess I cheated a little.
Well, it's interesting. How many people in this room have been in crypto longer than 9 months? Okay, so 40% maybe. So you're more than most. And Kendrick, when did you know?
I would say my first real exposure was probably Ethereum, and would say the DAO, looking at a rather novel way, and I came from the investment fund background, looking at how it can be used to incentivize engagement and participation. But I would say spending 80%, looking deeply at it, was in connection with advising and launching the Filecoin ICO on CoinList last August.
So, that's a great thing. Then we'll jump off here, immediately get off track from what we talked about talking about. Let's talk. So can you talk about the Filecoin token economics and what that was like, figuring that out?
Even today, I still think that that's one of the more, in my opinion, noted or good example of good token economics. Before that time, a lot of new projects, issue a lot of kind of like block awards right at the time of the ICO. Juan and Jesse decided to defer up to 70% of that over the course of multiple years to incentivize engagement, the different participants within that ecosystem. And I thought that it was a pretty smart thing to do. They did learn a lot from Ethereum, from DAO, but nonetheless, there was, in my opinion, a good example.
Wow, so that's super interesting. And so can you talk about, I know you talk about specific projects, but when you've looked out there at projects, what have you seen to say, wow, those guys really got token economics right?
Oh, goodness. Again. Well, so...
Or is it no one? Because it's so early.
I actually have to say no one.
No offense to anybody in the audience.
No offense to anyone in the audience. And that being said, so when you design the economics for a system or for a token, it has to be a holistic design in order to get the kind of behaviors you want. So I think that there are some ideas floating out there that are moving in the right direction, but maybe the whole design of any one project that I have looked at is not what I would think could accomplish the behaviors that the white paper says it's supposed to accomplish.
Okay, well, that's too bad. But I don't, in my view, kind of the two biggest issues and kind of the two meetups that we've started are the governance and consensus meetup and the token economics meetup. And I think we're like both very early in the study and understanding of those, and that there's actually no panacea to get to. There's no perfection. There's no, hey, when we get there, we're done, right? Even on governance, right? There's no offline good governance, let alone online good governance, but it's about getting better, right? And so in terms of what you've seen out there, that okay, these guys have helped get to a better place than we were before. Have you seen anything that even got there?
Sure. So I'm gonna preface my answer by saying, you're right, there is no overall panacea. And part of that is because different platforms, different entrepreneurs have different goals, right? And there's different things that you can accomplish with a token that involve trade-offs. So you have to decide, is it more important to me to raise a whole bunch of money right now, or
Yes.
Or yes. For some people, yes. But for some people, they might say, you know what, I'm willing to give up a little bit now in order to improve the probability of a successful launch 2 years from now. And those choices about what exactly those trade-offs look like depend on the specific project. So in answer to your question, so there's this conflict between creating a token or an ICO that is likely to have the price of the token skyrocket very, very shortly thereafter, and creating a token that the platform will be able to launch successfully and gain users who are going to spend the token for goods and services whenever the platform launches, right? So if the price is continuing to skyrocket, no one is going to spend. So how is the platform going to work? So I think a couple of the ideas that I think are really interesting are ones that maybe discourage a little bit of the speculation, which unfortunately means that the price might not skyrocket so much, but then could do better at ensuring the platform's future successful launch. So 2 examples of that are these token lockup periods and having uncapped sales.
And so I get obviously you can't sell, obviously increases the price, and the uncapped, what does the uncapped accomplish? Obviously, if there's a cap, people feel more comfortable about how much is going to be raised. Is that the point, or was there another point?
So in an uncapped sale, they might set a price for the token and then say all comers can buy. When the token sale is over, that produces the number of tokens that are going to be available to the system. So this might be discouraging for people in particular who want to do a very fast turnover speculation, where as soon as the token becomes tradable on an exchange, the price would jump up if the coin had previously been capped below what the market demand was. But if the token is supposed to be used to be able to buy a particular service as a utility on a future platform, then the users of that platform would still have a value to buy the token, even if they don't think that the price is going to jump up.
Yeah, it's amazing how quick it becomes complicated. You know, Kendrick, when this is, just to maybe even kind of autonomize it in terms of, are there, and this is a tough question because I know you don't do this 24/7, so are there like building blocks when you think about token economics? Are there some basics that, here is just, when you see something, if it doesn't have A, B, and C, then these guys just have no understanding of what's going on?
I think it would be helpful for me to share my own definition of what token economics means.
Yes, thank you.
Because like securities, utility, these are terms that everyone uses, and 8 people would have 7 different definitions. So I think of token economics simply as like a digital scarcity that's being tokenized to incentivize a wide network of users, and they would participate either by contributing a resource or receiving one. So usually token economics is how a good one would you ally interest and incentive among all the participants. Typically there are 4. So you have the core developers, you have the people who use and develop the nodes, and then you have the users of the network, and then the major stakeholder. So over time, very often there's going to be friction between 2 or more.
I'm sorry, you said the major stakeholders, and how do you define that? Are you
major stakeholder meaning someone who owns, say, 20% of like tokens.
All the coins.
Let's say the venture investors in Filecoin probably currently represent, significant major stakeholders. So at the end of the day, 2 things that they typically drive, either security or network value. So both of them can be used by contributing different resources. I would say we analyze on how effective token economics of a particular protocol, how effective it would be in driving either security and or the network effect among all of those participants over time. So to answer your question earlier, though, there isn't, I would say, there's one that works. I mean, like everything else in blockchains, it's still work in progress, and we see new approaches being developed every day. You know, the shift from proof of work to proof of stake into delegated proof of stake, and the evolution continues. And I think the day that we have that perfect governance, I think it's going to be a good day for fundraising, and that's going to make ICO and capital fundraising on a tokenized basis that much more effective.
Yeah, I'm looking forward to that day too. And can you, that's actually, I mean, Kendrick, thank you very much. We're actually supposed to start with that question, and I think it is an important one to answer. Can you define what token economics means to you?
Yes, it's a very academic definition. So token economics.
I assume that.
Yeah, sorry. Token economics would be the study of token design, monetary policy, and token distribution as it relates to a functioning blockchain platform. I think that it's important to note that there's a lot of economics related to blockchain that doesn't fall into this narrow category of token economics. So, for example, the structure of the platform or the market is incredibly important to providing the right kinds of incentive that you want to see, separate from what the token itself looks like. So at Prysm, whenever we do an assessment or start design work on a project, the very first thing that we do is look at the platform design, the market design, the transaction design, to see if the incentives are right for the kind of behavior we want. And that is token agnostic, meaning that as long as the currency is passing in the way that it's specified, it doesn't matter which token you're using. After we've done that, then we look at the token design itself. You could have problems with the token. For example, if there's not enough liquidity, the market might fail. Or you can create a token design that can improve upon a working platform, for example, by subsidizing public good provision for the kinds of behaviors that you want.
You know, I'm interested. I mentioned this guy, Tom Bollock, who had worked at Zynga. And so he got really smart and had contacts into token economics because of experience building these gaming token economies. So I'm trying, you know, were there any analogies that you used to, you know, was it gaming or was there something else that was analogous to what you're doing now that gives you context, or was it more just kind of economic theory?
It's mostly having a good map of what economic theory is and the different areas that it touches. So basically every problem that I've seen, anything that, any white paper I've read looking at what the entrepreneurs are trying to accomplish, there is existing economic theory that tells us how people are going to behave within that kind of context. Now maybe you have to adapt it a bit, but you know, the economic research has been done for centuries, so there's a lot of stuff there that maybe hasn't been previously accessible to these technologists that we can bring to the table.
Okay, super interesting stuff, but I want to bring it back because I think, you know, I'm a total economic nerd and love talking that, but probably other people want to talk reality and, you know, just in terms of like stuff that has actually happened in terms of like the YouNow, which was another coin list. Token economics. I don't know if you had a chance to look at that, but you know, and also for me, when I first thought of token economics, what I thought of was I'd seen all these projects, and they were all effectively using a token instead of a dollar. And when I realized what token economics is setting up a system where the token does other things and accomplishes other things than a dollar could. And that's how I define token economics, and I think we're just at the very beginning of the study of it and how we monetize it. But like, did you get involved at all, or did you have a chance to look at the YouNow token economics and you know, have any thoughts on that? I
did, and I have a point about the prior question as well, and Cathy may disagree with me here. So there's a reason why I think economics is known as, you know, economic theory, and it's not quite a science just yet because it's predictive of human behavior. And I think human psychology plays a huge role in devising token economy for any platform. Human behaviors are known to be irrational, which is why even today, with so many incredibly brilliant people like my colleagues here, that we still don't have that perfect governance just yet. Take props as an example. It's a marketplace, it's a platform with already tens of millions of users, and now they introduce an element so that people wouldn't just do things out of their own goodwill, but that they get incentivized for participation on the two sides, and the psychology behind that is still a guessing game. So I do think that I do have a degree in neuroscience, and so and I don't have a degree in economics, and so in thinking of token,
you're a young guy.
I focus a little bit more on the psychology and defer to my talented colleagues here and Cathy's advice on the straight up theoretical basis of it.
Yeah, and I'm sorry. So, and on the now, like one of the things too in terms of token economics is, for the most part, I think of token economics is when there's more than one token. Although I guess you can put smart contracts on a token and then they can become kind of multi-token. So do you have any thoughts on that?
I mean, take an example like Basecoin, which is now Basis. They have a stable coin, and obviously that's not a very good investment for anyone who buys a product that remains, exactly $1 per coin forever, right? So they have yet another component that just incentivize people to do it. So I think it's highly fact-dependent and project-specific. Can be very confusing if the whole goal of blockchain is to get as many people to adopt and use it who are outside of the ecosystem today. The more elements, variable you introduce, the harder it is for someone to become familiar with what you're building. But in some cases, like Basis or Intangible Labs, it's a necessary component.
Do you have any thoughts on that?
Can you repeat the question?
Well, okay, I'll pick something maybe that you want to talk more about. What I was talking about, actually, I think it is a good question. I think of token economics needing more than one token, because for the most part, again, with one token, all you can be is like a dollar. And so, obviously you can put smart contracts, and then those I think of almost as being multi-token. So do you have any thoughts on that in terms of?
You mean more than one token on a single platform, or more than one
Yes.
token total? Okay.
Yeah, no, on a single platform, trying to drive different parts of the economy to different behaviors, right, and rewarding them for different behaviors.
Right. So I think that it depends on exactly what kinds of behaviors you're talking about. So certainly I think that it could make sense to have a separate token for trade versus governance. Versus if you're going to have something related to equity or something paying a dividend, these should probably be different objects. And in terms of incentivizing behaviors, it's really about the ratio of reward per whatever behavior it is you're measuring that matters. And so you can use the same token to reward different kinds of behaviors using these different kinds of smart contracts.
How different what you described to me sounds like a frequent flyer mile. Do you see it as a frequent flyer mile, or is that not, or do you see it as something different?
The tokens to reward behavior?
Yeah, right. I mean, like a frequent flyer mile, they're giving you something that's not, I don't know, Kendrick, do you have a thought on that?
I do. I mean, looking at and a lot of projects that we see, applications or white papers get sent in. I mean, that's one of our lens, right? If it just can be like a frequent flyer mileage program, then it probably shouldn't be on the blockchain. But when you have something that does encourage people to behave more and more with a notion of liquidity and volatility of a token, if they do more, they get something more out of it. But more than just a one-side ecosystem. With a mileage, you have customer flyers. The more you fly, the more points you get. And I think that kind of just, one-side marketplace is not, in my opinion, not quite right for a tokenized project.
Right. So the frequent flyer mile, you're talking about having a platform in which one side of the platform is a single entity, one side of the market?
I mean, I use frequent flyer miles. For me, it's the easiest construct in which to put what a token, what utility tokens, like what is the analogous, off-chain to what a token is. And for me, it's a frequent flyer mile.
Well, I think that it depends a lot on the platform. So if you have a platform with peer-to-peer trade, then probably $1 is more similar to whatever token you're looking at.
Right, but that's bad. I'm saying, if it's just $1, that's not token economics.
I disagree with you. So again, I think it is important to make this distinction between the economics of the underlying platform and the token economics. Now, there are quite a few projects that are trying to create behaviors that have these positive externalities. So when I do more of a thing, it benefits not only me or not only the particular person I'm trading with, but also other people who are on the platform. Now, economics tells us that if you just pay directly one or the other person for that transaction to happen, those public goods, those externalities, are going to be underprovided. So you can create a token system where the inflationary funds are distributed in a way to encourage those externalities, those public goods.
Of course, in the mileage program, you have one entity that controls all the points, right? That is the airline company itself. And indeed, because of the bearing some similarities to the tokenized system, that's why every single airline has a mileage program, and it's a massively large industry across the board. So those elements already add value, but the secondary market is almost non-existent, save for like the most seasoned travel hackers. So if you manage to introduce that liquidity, then it gets closer and closer to the tokenized
totally.
space.
Like that's why this is the revolution, because now we've provided liquidity for the frequent flyer miles, right? That's the major innovation in cryptocurrency. Again, that's just the analogy I use. So look, we've always believed like this is the first Crypto Monday that we've ever had content at, because we actually believe that the most value is not derived from hearing us yap, no offense, but from everybody yapping with everybody else who's in this room. So I'm done with my questions. I'd like to open it up. For me, I could go on for hours with this stuff. I think it is, I think we're again in the very early days of this. I think in 4 or 5 years, we're going to have some of the best universities in the world graduating kids and PhDs in, well, I guess you got a PhD. When's the first PhD in token economics going to be? Or are you it?
I did not study blockchain while I was in the PhD, but I hope in the next few years.
Yeah, I mean, right? It's a thing, right? There got to be kids like studying, trying to figure this out. And in any case, let's open it up to a couple questions from the audience.
My question is, Tristan Zhang, Helix Capital Partners. The question is for the entire panel, and I would just like to learn a little bit about your insights into how, because blockchain is such a global phenomenon, because that now we're catering toward investors with different appetites, different types of criterias. In the course of setting up your token economic structure, do you have certain types of awareness, I would say, or certain types of success stories in certain markets that would be catered towards such clientele, and what were the results of such specific actions?
You want me to go ahead? So I would say I can't evaluate the success of an ICO or a token sale without seeing what happens to the platform that those funds were supposed to help develop. Unfortunately, there's not a ton of examples of ICOs that have gotten to the point where they're supposed to launch. We're going to be seeing some of those happening quite soon. So I think that it will be interesting. But again, as I mentioned sort of at the beginning of the talk, I think there is a trade-off between appealing to some types of investors and creating a token that will enable a successful platform. So I think you have to wait and see the end product.
Need more data overall.
Yes, but it's not just data regarding the amount of money raised. Also, what happened to the ultimate platform.
My recommendation would be that just know that there isn't a single approach that's perfect, and that there's major flaw with every single approach. May it be, if you look at, proof of work, then, reliability, but now you're obviously compromising with efficiency and how expensive and costly it is to do it. If you approach proof of stake or authority, then are you just moving back to the more centralized approach? And a lot of these have yet to be played out. Depending, I think it still goes back to the fundamentals of what you're building, who your audience or what the community will be, and think through how long-term you can best incentivize it. The more complex your community currently is or will be, the more you should consult, I think, like Cathy and Prysm, who are in the space, they've seen dozens, if not hundreds of it, and that they can give you a more holistic insight, but nothing is perfect and nothing is going to be perfect in the near term, in my opinion.
Any more questions? Should I walk around?
Do you have ideas how you can potentially measure whether a given token economy is working? And in practice, usually I think you have the problem where you have a speculative part of the token economy and the real token economy. So do you have some ideas how to measure whether it's actually working and it's not all speculation?
Right. So I think I would measure two things to see if platform is working properly. So one is the adoption rate. So are you attracting people into the ecosystem to use the token? And two is, are the behaviors that you're trying to create actually occurring on the platform? So actually we just met someone who has a token curated registry that's in what we call the bad equilibrium. So the curators on this registry are voting off good content and voting in bad content, which is the opposite of what the entrepreneur had intended. So those are some bad incentives there.
Yeah, in my case, I think that it's kind of like a test or an R&D facility for the entire ecosystem. Things work until they don't, right? Take the DAO as an example, and all of a sudden people are abusing the proof of stake concept, and they try to impose that moratorium and didn't get through. So with each particular protocol, obviously the thoughtful ones, I gotta say, they work until they don't. And we're still very much in the R&D phase for the entire ecosystem. So with each of us, just do our homework, look broadly, consult widely with everyone that you can talk to and that you think have informed opinion, and then reach your own decision on what is best based on the community that you're trying to build and the vision that you're trying to realize.
So, Cathy, you actually said the word that I was hoping I would hear, which is entrepreneur. And a little bit about the whole raising of money, where it's a little bit inverse from where Lou and I were starting out a long time ago in angel and VC investing. Would it be possible, in your view, to be able to put some benchmarks into the tokens whereby money would be released only when the entrepreneur, the project, achieves certain goals, thereby reducing some of the negative criticism about the large raises?
Yes, and actually I believe that there are some projects that are already doing that. So you can put the funds into a smart contract you could release the funds on a timely basis. You could incorporate some sort of governance where token holders get to decide when funds will be released, et cetera.
Once upon a time, and this is back in November or December, people think that the SAFT is going to be the standard. And when we were thinking of launching a token sale for non-accredited investors in the US, we put a lot of thought into thinking, what would the regulators think and what is best? And I definitely do not think that giving money before you build a product, and if you go to Vegas and spend it all, that investor has no recourse. So because of that, every single project that raises on Republic use a loan instrument. We call it the token DPA, debt payable by assets. Essentially, we benchmark milestones, and until the founders or the founding team, the contributors, reach a certain milestone that we release money out from escrow. And I don't think that that's going to be the standard forever, but you know, this is just another approach on being thoughtful about not accepting status quo and moving things forward in a way that's good for the industry.
So, to mix things up, the next question is going to be from over here. This will be the last question, but I would ask that you guys give us 5 more minutes. Lou and I have an announcement we'd like to make to discuss with you guys. And then our sponsor, David Siegel from Pillar, would like to speak. I made a host's error, and I hope you'll help me correct it.
So last fall, Bernitsky introduced like MV equals PQ, and sort of the concept of velocity for tokens was introduced to this ecosystem. And then shortly thereafter, we kind of came across the velocity problem or potential problem. And it seems like that the velocity problem, there's people on both sides of the fence that maybe token velocity is a problem for value capture, or maybe it's actually helpful for value creation. So just curious what your thought is on velocity in the context of value capture, and then if you need to help structure around velocity, what are some ways you can do that?
Oh, God. So I think that the money velocity equation is really interesting in that it, in my view, has been misinterpreted in some writing and some discussions. I compare it with another definitional equation, which is the profit function. So if you raise the price on the right-hand side of the profit equals quantity times price minus cost. If you raise the price, that doesn't mean that profit goes up. Other things in the equation also move in accordance, right? And so the same thing it happens in the velocity equation. So velocity is very much tied to how much money is being spent, how many goods or services are being acquired. And so it's unclear that if you slow down velocity, that actually does increase the value of the token. Well, I may not have directly answered your question, so sorry.
And as a securities lawyer, I'm going to defer to the professor in finance from Cornell University here, and I don't have anything to add on that piece.
I'll actually add a little bit, because I've spent a lot of time on that. And it's actually, I mean, it's a great question, because it cuts to what I think is a very big misconception of what a utility token is, and to the degree that, you know, a utility token is not a value maximizing mechanism. That's a share, right? You buy a share, they're optimizing for the value of that share. When you buy a utility token, it's not set up to to maximize the value of that thing. That's why a lot of people buy it, which is kind of weird, but that's not what it is. So, you know, the velocity issue, in fact, is true, right? That's like one of the conundrums of this, is the more successful you are, according to MV equals PQ, the less valuable your token would be. And that's why then you set up these artificial things like holding the token and not allowing people to sell the token, because then there are less tokens to sell. And again, we're in early days of all of this. And I think, you know, my guess is the majority of people in this room know there is something big going on. You know, what I on Twitter call the biggest thing to happen in the history of mankind. So nobody believes more than me, and I'd really like to thank both of you for coming up here and really helping to push the dialogue forward. Let's give them a hand.
Thank you, Lou.
Thank you so much.
Oh, awesome, man. You guys rock. I'm going to give a 1-minute commercial. So CryptoOracle, we just opened up a crypto shared workspace at 60th and Madison. It is really a really sick space. We really believe that crypto isn't different for the most part. It's just new things come along all the time. 40 years ago, junk bonds were new. And all the traditional banks said, hey, you know, that's a Ponzi scheme, that's a scam. We're never going to do that. And 40 years later, they're all doing it, and junk bonds is just another thing. And for the most part, that's what crypto is. It's just another thing, and in 40 years, it'll look a lot like all the other things like junk bonds does. But I think the thing, when we look back and say what was different about crypto, The thing that we really believe is different about crypto is the importance that community makes in the success and failure of projects. And that's why we describe ourselves as a community-first VC. And the latest thing we've done in that vein is we opened up this shared workspace, again, at 60th and Madison to, again, create a place where I think the more that people are around other people who are doing crypto, who can help them, everybody's thinking about the same issues, right? Everybody's up against the same things. And the more that we can communicate in different things, this is all about that as well. A shared workspace is a thing for that as well. So if anybody's here looking for space, whether it's our space or another one, look for where a bunch of people are so you can help create a crypto community. And then, James, you wanted to make, an introduction. David? David? Oh, there he is. David Siegel. I'd like to give a minute, who's been a sponsor tonight. So, David, thank you very much for sponsoring. Hopefully, you were happy with the quality of the content.
Thank you. Thank you, everybody. Thanks to our panelists and to Lou and to the community and to our Pillar token holders. Wow. Wow, amazing. Just going to take 3 minutes of your time. I am the author of the tokenhandbook.com, the world's oldest book on tokens. I believe we're in the very, very early days of tokens and token designs and token economics. I don't think we should apply macroeconomic principles to tokens because tokens are not money and these are not real economies. These are toy economies that are very small and very experimental. We're in the Model T years of tokens. The ERC20 token is the Model T of tokens. All of this will be replaced over the next 5 years with new and more interesting things. So we're on a path of discovery in token land, and you can join us because I'm leading a token camp very conveniently located in Lithuania, in Vilnius, Lithuania. We are having our big Pillar Summer event. It's the Crypto Woodstock of the summer. Is July 15th to 22nd. The conference is free. It's paid for by Pillar. And we would like you to come, and I'll be leading 4 days of token camp in Lithuania. If you get yourself there, you'll be very glad you did. In fact, and I just want to take 1 minute and say what the Pillar wallet is for those who don't know. The Pillar wallet is being developed now in London and in Lithuania. It is the next generation wallet that will let you buy and sell cryptocurrencies, move them around, keep them safe, store them, and then you'll be able to make a phone call and buy a t-shirt or rent a car in this wallet. It is not your it is not your grandmother's wallet. We are creating a platform that we hope will be your digital personal assistant and will eventually replace iOS and Android. We just welcome you to pick up these and the free t-shirts here. And for those who leave us your business card with Andra, where's Andra? Leave your business card with Andra. We will have a drawing tonight to give a free GoPro Hero 6 black camera to the winner, but you must pick it up in Vilnius in July. We hope to see you there. Thank you so much.
Okay. Thanks everybody.